Inflation can feel like an invisible threat slowly eroding the value of your retirement portfolio. It's a constant concern for American retirees who've worked their entire lives to build a nest egg. But there are strategies you can use to combat inflation and protect your wealth from these rising costs, especially strategies that you can implement quickly. If you're serious about safeguarding your savings in the next couple of weeks, stay with me to discover how you can stay ahead of inflation and set your portfolio on the right path for long-term success. But before we dive in, if you're looking for a deeper strategy to protect your wealth with gold IRAs, make sure you click the first link in the description for a free guide. Thousands of Americans are already turning to gold IRAs to protect their savings, and you'll see why in just a few minutes. Now, let's talk about some of the smartest ways you can combat inflation and shield your retirement portfolio. First, let's start with diversification. A common mistake retirees make is keeping all their investments in one basket. Typically, this means relying heavily on stocks or bonds. But with inflation eating into the purchasing power of cash and bonds offering lower yields, this is a dangerous strategy. Diversifying your investments across asset classes is key to minimizing risk and ensuring long-term stability. One of the smartest moves you can make to diversify is to consider a gold IRA. Historically, gold has outperformed other assets during times of inflation. While stocks or bonds may struggle to keep up, gold tends to hold its value and even increase during periods of economic uncertainty. For retirees with 100K or more in their IRA or 401K, or even those with 5 pluses in savings, a gold IRA provides a safe, tangible asset that's almost immune to inflationary pressures. If you're unsure about how a gold IRA works, don't worry, the free guide linked below will break it down in detail. And trust me, it's worth exploring because if you're serious about protecting your wealth in the next 2 weeks, this could be your game changer. Now, if a gold IRA isn't something you're considering right now, there are other strategies to protect against inflation. For example, you can look at Treasury Inflation Protected Securities, or TIPS. These bonds are designed to keep pace with inflation because their principal value increases with the consumer price index. While they're generally considered a safe investment, their returns aren't always as high as gold. This is why many retirees pair TIPS with gold IRAs to maximize protection. Another strategy is real estate. Investing in rental properties or real estate investment trusts, or REITs, is a good way to hedge against inflation. Real estate tends to appreciate over time, and rental properties provide a steady income stream that typically increases with inflation. However, managing physical properties can be a hassle, and REITs often don't offer the same level of protection as a gold IRA. You should also consider adjusting your asset allocation to include commodities, such as oil or agricultural products. Commodities generally rise in value during inflationary periods, but again, the downside here is volatility. With gold, you get a more stable and reliable hedge against inflation, especially if you're concerned about the long-term effects on your portfolio. What I want to leave you with today is that, while there are a lot of ways to fight inflation, the most effective strategy is one that's tailored to your unique financial situation. If you're looking for a truly reliable and time-tested way to secure your wealth from inflation, a gold IRA should be top of mind. It's especially perfect for American retirees with 100K or more in their IRA or 401K, or those with 5 pluses in savings. So, if you're serious about making sure your retirement portfolio is as protected as possible from inflation, click the link in the description below. That free gold IRA guide could be the step that takes your wealth protection to the next level. And remember, you don't have to wait for the economy to get worse to start taking action. The sooner you start planning, the better. Make sure to take advantage of the resources I've shared with you today and set your retirement up for long-term success.